Hey, welcome into the Craig Houston podcast where we're talking about the real estate scoop for this week. Hey, you already know I'm already here with my favorite loan officer for the week, each week, every week. Hey, stay tuned. We may even be doing an open house together. You know how this go. Hey, so we'll see. Hey, welcome in, Oscar. How you doing?
Pretty good, Craig. How about yourself, man?
Doing good, doing good. Hey, we got a jam-packed episode for you today. We're going to be talking about things that first-time home buyers should consider before they buy. Oscar, how you feel about this subject today?
Oh, I feel great about it. Just ready to educate some people, getting them comfortable to purchase their first home.
So, the first things that I would like to get out and talk about before as we kick this off, we got 6 things that we're going to cover today. The first thing is affordability. Like affordability when it comes to purchasing your first home, and it's a big undertaking, right? It's one of those things where the prospective buyer may have some type of feelings about how much could they afford, don't really know what they can afford. What are some things that they can do to actually figure out the affordability?
Yeah, Craig. When it comes to figuring out how much you're able to afford, it just all depends like what kind of loan product you're using. When it comes to a VA loan, like since I'm a broker, depending on your credit score, you can have you can afford up to a 55% debt to income ratio, depending on which lender we go with. So all you have to do is figure out what is 55% of your gross monthly income. And, once you figure that out, that's how much, monthly house payment that you could afford. But then you also got to factor in your expenses as well.
Okay, so like, what do you recommend as a loan broker for basically when it comes down to actually figuring out? I know you get pre-qualified, right? We already know
Yeah.
affordability comes down to eventually you come up with a number and say, hey, you are qualified to purchase a home. You can actually purchase up to this much home, right? But when it comes down to do you as a loan broker, do you always ask the client, what do you want your loan payment to be, or do you just say, hey, this is what you can actually afford?
So it depends. Like we send out a pre-approval letter. How I do it, I send out the maximum pre-approval that they could, technically purchase. But it all comes down to it. I asked them what are you comfortable paying monthly?
Right. Okay, so let's talk about what's included in that monthly payment. So we already know it's actually got to be the mortgage that you're going to be paying back on the loan, right? Whatever the
Yep.
interest rate is, and then that gives you your payment. But what other things are included in that payment?
Yeah, so your mortgage is consisted of like four things, five things if you count like mortgage insurance. But for the four things is principal, interest, homeowners insurance, and taxes.
Okay. So and then HOA, they have an HOA that's paid
Yeah,
separately outside of your loan, right?
yeah. So whenever like when a lender gives you a quote for a more monthly payment, they're not going to factor in that HOA fee because it's completely separate.
Okay, so for those who don't know what HOA is, just to be clear here, homeowners associations, or even if you live in a condo, you may have a condo association fee, which may have to be paid separately outside of that payment. Now, so affordability is key. That's the first thing that we have to talk about. But then, secondly, as a real estate agent, I always ask clients, location. Where do you want to stay? Because like no one can ever tell me that they've never heard the words location, location, location. Like that's principal to anything because the what you can afford is going to be determined on where it's at because the land is more valuable in certain areas. Is that right?
Yeah, that is right. When it comes to like FHA loans, they have certain county limits. So depending on where you're trying to shop for a home, if you're going to do a FHA loan, the county limits are different. And also when it comes to VA loans as well, um, there are loan limits as well. Like for Virginia, is there's one specific loan limit, and then in Texas, there's a different loan limit. So yeah, just really do some research on where you're trying to buy.
So okay, so let's talk about loan limits just for a second. I don't want to spend too much time on them, but let's just give an example of a loan limit, right? So when you say that there are two different, there may be a different loan limit in Texas versus what's in Virginia. Is this based on locality of the county? Because it may be a more expensive county that you may be actually moving to, which will require you to have to be able to afford more affordability of a home at the end of the day.
Yeah, well, so I think for each state on the VA loan, it's only for a state. Like, oh, in Virginia, it's this
Okay.
amount, and for Texas, it's this amount. And then when it comes to FHA, it's more like a city.
Got you. Okay,
Yeah,
so based on whatever state that you're moving to, depends on how much the cost of living is there. So that rate,
yeah,
so that affordability may go a little bit higher based on your loan limit.
yeah, yeah.
Okay.
That
So I think location is important because right now what I see is like as I do home evaluations and I talk to people like Virginia Beach premium land, like anything that you get in
yeah.
the Virginia Beach, you paying pretty much top tier dollar for.
Oh
Chesapeake
yeah.
in Hampton Roads is going to be another area just like that. And what I've been recently seeing, I actually seen last week I saw 4 listings that sold in Williamsburg, and they all sold for over asking. So
Really
that
now.
tells me, yeah. So that tells me that certain land in Williamsburg is actually being sold at a premium right now, and people are competing for it.
What's going on in Williamsburg, Craig?
I
If you don't
have
mind.
no clue. Like I was surprised. Like I literally, like what I do is, as an agent, I typically try to wake up early in the morning and I try to go through the solds for the previous days or a couple days previous, so I can just see what's actually selling. And really, it kind of gives me a market. So I'm also looking for my clients or my potential clients or neighborhoods that they're actually living in to kind of see what the comparison is for the values of homes that they have. And recently, I came across some in Williamsburg. I was like, three out of the last four homes I've seen in Williamsburg, they all sold for over asking. One of them sold for over 20,000 over asking.
That's
In this
amazing.
type of market, yeah. In this type of, so that agent did a really good job for their client at this
Yeah,
point in time.
yeah, yeah. I bet their clients probably, super happy right now.
Right. So let's talk about the next subject, home conditions. Right. Home conditions can be imperative. So what I usually we've seen them. Let's talk about this. We've seen a spike from 2020 to early 2022 where home conditions was not being really taken into consideration, and really and truly we've seen a lot of home inspections being waived at that point in time. Now, as an agent, I would always go against the grain of saying don't get a home inspection done. You need to get the home inspection done because you don't really know what you're undertaking as a home when you're as a homeowner that you're going to be dealing with if you actually take this loan on. But in certain cases, certain loan types make it where you have to have a home inspection, or at least when the appraisal done, the appraisal takes into consideration the home condition and gives you criteria that you need to meet. Is that correct?
Yeah, that is correct. When it comes to VA loans, like you need to get an appraisal. Like you can't do an appraisal waiver on a VA loan. That's just not a thing. And the one thing that comes with that too is like, they're only going to lend money to something that's worth lending, right? So let's say like if the home is selling for 250 and the appraisal comes back at 230, you're gonna have to cough up that extra, $20,000 just to, buy the home in that case.
Yeah, I learned the fancy term, I don't even know if it's fancy. Let's not even say it's fancy. But I did learn a term when I was actually going through my home process because my appraisal value didn't come back at the sales at the ratified contract listing price, right?
Okay.
So I heard the word tide water and I said, "What the hell is tide water?"
Tidewater.
Like that's the first thing. Like I got the email from my lender. Hey, this appraisal came back in possible tide water. And I'm like tide water, like Virginia, or like tide, like what does that mean? And I kind of find out tide water is a real estate term that people use for when they say that the home is not going to appraise for the value that was agreed to. And I was like, well, how did they even come to that term? But whatever, that's the term. So let's talk about appraisal gaps because that's what I know. We're not in that market right now, but appraisal gaps was a thing at one point in time where basically, like you said, if you agree to a contract
Yeah.
and say the offer price is 400,000, but the appraisal comes back at 390. The price comes back at 390. Now your tide water is $10,000, or your appraisal gap is $10,000. People was negotiating appraisal gaps earlier on to say I would cover whatever the appraisal value was up to this value amount. Where basically you could say if it didn't hit the appraised value, I would give you another 5,000 over the appraised value that it actually comes to if it don't meet the requirement of the contract.
Got it. Funny you say that because that's how I actually ended up submitting an offer on my duplex. Because so we went over 10,000. We're gonna give $10,000 above that appraised value, you know, because
Mm-hmm.
it was listed for 238, and we were gonna go up 10 grand. But luckily, the VA appraiser appraised the property at 248, so I didn't have to cough up that 10 extra grand.
Oh yeah, I had to cop that 10 grand over mine. I had the same issue. I said I would guarantee 10,000 over asking, well, over appraisal value if it didn't reach the appraised value. Man, it didn't, so I had to give them 10 grand. So, but I mean, it is what it is, right? Like it was the type of market that we was in, and even agents and lenders, they're not they're not going to be exempt from it at all. So you have to deal with what the market gives you at that point in time, and this was the type of market that we was in. So that. But let's talk about the home condition just a bit more here about what is some of the things that can deter a loan from actually going through when it comes to home condition.
When it comes to home condition, I know with because I mostly just do VA. With VA, I know like as little as like handrails on properties, you got to get that taken care of before you even get a loan approved when it comes to VA loans.
So like if the VA, so the VA determines through their appraisal, because okay, so let's go back one more step because I don't want to skip something. So a regular appraiser or a regular appraiser is different than a VA appraiser, right?
Yeah.
You got to be certified to actually do VA property loans, right?
Yep, that is true. That is true. And then I heard they're way more strict when it comes to not more strict, but they have like more, I guess, guidelines they have to follow when it comes
They
to
have a bigger checklist to go through than just a regular appraisal that you're going to get on the home. So to me, and then they're evaluating the safety and the condition of the home to make a recommendation to the lender if any repairs may need to be made prior to ratifying the loan.
Yep, that is right. That is right.
Okay, so have you ran into that issue yet?
No, luckily I haven't ran into that issue yet when it comes to those VA loans.
So, and this could be something that could be that type of condition can actually turn into where it's actually something outside of what you're already going to owe for closing if you have to pay closing costs yourself as well too, right?
Say that again, Craig.
So this could also turn into where the home condition, like say the home condition needed repairs, this could be almost like a closing cost situation where it'll be outside of closing costs, where you may have to get a repair done before you can actually go to close.
Yeah, I mean, yeah. You know what? You could do that too because in my last VA transaction, like they had to get some repairs done on the window, and they settled that stuff outside of closing costs. It just couldn't be done at the closing table. Cash can't be transferred over to closing table.
Right.
Yeah.
So that's my thing is like you got to make sure that you are finding the home that fits you, but the VA also is not going to take on the responsibility of a home that they don't feel is going to be able to be resold or give you the upkeep that it's supposed to give you.
Yeah, they definitely want to give you money as long as the property's worth borrowing against.
So another part of actually a first-time home buyer figuring out things they need to do before purchasing a home is future plans. Like are you going to be staying here for a while? Is your job going to make you move in a few months or maybe a year or two? Or even growing your family? Are you getting enough home that if your family grow right now, are you okay with a starter home, or do you need a little bit bigger of a place before you actually start to grow your family out? Like these are things that need to be considered as well too for future planning.
Yeah, I would say so. Yeah, especially because buying a home is definitely like an emotional decision, and it's one of the biggest decisions you'll ever make in your life. So you really want to kind of plan out, oh, how's my life going to look 5 years from now? Oh, what kind of state of mind am I in? Am I, okay to purchase this home? Am I doing this big financial purchase just because everybody around me are doing big financial purchases? So that's one thing I would say to people when it comes down to that too.
Yeah, so like the average time span that somebody stays in a home, I think under the age of 50 is about 4 to 7 years. So if you typically people have moved or upgraded home or downsized home during these time frames. So it just depends on the type of home that you need at that point in time. So taking into your future plans is something that's always going to be I would recommend to always understand where you're at in life and understand what type of season of life that you're in. So you're not, making irrational decisions when it comes to purchasing a home, and you don't want to be in a situation where you turn upside down. Like, for instance, I know a customer who actually is trying to sell their home at $434,000, and they purchased the home last year at $380,000. and homes in the neighborhood are going for about 390. There's no way they're getting 434, right?
Yeah.
So and they're oblivious to the point that they're not going to get 434, and like I think they have to understand too that they're either going to take it at a loss if they're going to actually get rid of the home, or they're going to have to stay in the home longer than they expected to stay in the home.
Yeah, that's one thing too with I guess like sellers right now, people they probably think we're still stuck like a year, 2 years ago where they think they can get, not top dollar, but whatever homes were being listed at that time, they think they can just put it on the market and it'll sell. But yeah, we're not in those times anymore.
No, we're not, and we're not even close to those times anymore. And so, I think this is what I was saying last week as I was talking about it on Instagram, is that price stabilization is happening in rent. And what we're saying with price stabilization happening in rent, I think you're going to see home prices stabilize at a certain level. Well, we may only go up 2 to 3% for a couple years here before it starts to see, bigger upticks in certain markets. But that still lends itself to where we're at today, where you have to understand your future plans, understand where you're at significantly, understand what type of loan vehicle that you actually have, because it's a difference between doing a VA loan at 100% loan to value, where the VA covered everything with zero money down, to where you may do a conventional loan and you're only putting 80% down. They're only putting 80% down and you putting 20% down. Your loan to value is different at that point in time. So the equity that you have may be a slightly different than what you would have with a VA type or FHA type of loan.
Yeah, that is true. Your loan will be totally different. Your monthly payment will be totally different. It's literally whatever. That's what one thing we ask is like, oh, what monthly payment are you comfortable with? What first things I ask, oh, have you ever served in the military? Because like that dictates whether if you're going to go VA or conventional. Just depending on what your credit score is. And yeah, it's super drastic because if you're going to finance, a VA loan, that's 100% finance. That's when you're going to $400,000-$500,000 like, price point, that's a big monthly payment, right now. A year, with today's interest rates, which is not bad. It's like, low mid fives right now, but yeah.
Like as we talk about future planning, so this is something that I would say too. If you feel, and this is what I want people to consider as we talk about this, if interest rates ever come back to a level where it's 3.5%, 4%, I want you to pay attention to, if you felt like you was in the market to buy a home, think about it really hard if you're going to miss that opportunity again. Because I was looking at a closing disclosure today where someone had a 2.7% interest rate loan on a $500,000 home. They was paying $2,100 a month for that $500,000 home. Today, that $2,100 a month, that's like what, in the 375s, 400s?
Shoot, dude, I would say even like 300,000, bro.
What? 300,000?
Yeah,
Man,
I'll say like 310. Cause I had a buddy who was cause I did a quick like a quick loan estimate, and I sent that over. He was looking around like 300,000, and it was like 2,100 month for the monthly payment. Yeah, it's like 310.
What?
Yeah.
Wow. So that's almost one. That's
Yeah.
1.5 times the amount of house that someone could afford in 2022.
But yeah, it was a VA loan though, so it was 100% finance.
This was the VA loan.
Oh,
100%, 100% loan to value, and it literally was $2,100, and this person had their property taxes waived.
Wow.
So yeah.
I mean property. Yeah, property. So they didn't pay no property taxes.
They didn't pay no property taxes. No.
All right. So that helps out. That helps out.
Yeah. So it should have been about 2,400, but they literally got their property tax, so they about 2,100. But still, like, even if in comparison, that is ridiculous. 300,000.
Yeah.
That's ugly. Oh, that's ugly, man. Okay. So, let's talk about the next topic here, which goes back into what we talked about when it came to what your mortgage payment is comprises of, but that is a homeowner's insurance. What's your thoughts on homeowner's insurance?
Say that again, Craig.
What's your thoughts on homeowners insurance?
Homeowners insurance. You factor that in on the loan estimate whenever we get, whenever somebody comes to us to get pre-approved. I factor that into their monthly payment, and depending on the price point of the home, we kind of have like a chart of like, okay, this how much they pay for this amount, this how much they pay for that amount, and you just have to be transparent as a buyer. As a client, you have to be transparent with your loan officer, because I had a situation with this lady who was trying to shop for homeowners insurance. So I was like, okay, I quoted her at this for her homeowners insurance, but come to find out when she was applying to these insurance companies, she filed claims like a year ago, you know, and I didn't know about it.
Mm.
So obviously when she got her, her quote from this insurance company, it was a lot higher than what I quoted her. So
Mm.
so that monthly payment that I told her no longer applies, because this is her monthly payment now, and she was really upset about it. But at the end of the day, it just comes down to transparency, because that's one thing a lot of people don't take in consideration is like, oh, it's just my homeowner's insurance, it won't affect anything, but it
Oh
really
yeah,
does. It
it
really
does because you
does.
got to pay for on a VA. I don't know on the conventional. Correct me if I'm wrong, but on the VA you have to pay the full year of the
Yeah,
homeowner's insurance up front, right?
yeah. It's with any loan, conventional FHA. Yeah.
So that significantly can have a big difference in how much you're actually going to be paying in your mortgage payment.
Yeah, it really does. And let's say, they're at their max limit. Let's say $2,000 is their, monthly payment. That's their max. And if they have a little bit slightly higher homeowners insurance, let's say, it tacks on 50 more bucks, that could make or break a deal, for some people.
Mm. Wow. Okay. So homeowners insurance is important, and I really do think everyone should have it. If you don't have it, I will make sure. I mean, to protect yourself, like the lender's going to be protected no matter what, but you got to protect yourself too, because if you don't, you may wind up without a home and nowhere to stay. Like it was a home in my neighborhood. It caught on fire like as soon after we had moved in, and their house is still not put back together yet. So I don't know
Really?
where they're living at. Yeah, I don't know where they're living at. It caught on fire bad. They wasn't home, luckily, but literally they're not. Their home is still got. You can still see the wood in their house because they would put everything back up in framing.
I
So
wonder if the homeowners insurance like gives them the money to go relocate, or do they fix that one home?
I think they have to. I think they have to. I think they relocate them to like a hotel or Airbnb or extended stay type of place, and then until they get all the investigation and everything else done to repair the home.
Yeah, that might take a long time.
Yeah, like it's been over. We moved here in July. I would say that happened in August or September. So they haven't been. They definitely have not been in their home since then.
Yeah, that's sad. That's
Yeah,
sad.
it is. It is. But that's why it's important to have a homeowner's insurance and to make sure you have the right type of coverage. Because when I could tell you, like when I got my first, I don't think it was this home. I think it was the home before where like they was like the quote that they give you for rebuilding your home it's never as much as you actually paid for it. Like I don't know if that happened to
Really?
you or not. Yeah, yeah. Like say the value of my home, say the home I purchased in San Diego was 340. Like they
Okay.
were like, they was like, to rebuild that it will be 315,000. And I'm like,
Okay.
why? Like, why would because the material? But you would think it would be more because the materials are going to get more expensive over the time. So they're like,
Yeah.
yeah, to rebuild that it'd be like 350. So why am I going to? So I bought the house for 340, but you tell me to rebuild it is going to cost me 315. That don't sound right to me. So you need to make sure you have the right coverage. So I think I even went over. I said, I'd rather pay a little bit more to have more coverage just in case the house something was happening to it, just to make sure that it's rebuilt back at least to the spec that I thought it should be built back to. So I don't know. You got to be careful with these homeowners insurance. They will try to quote you some weird things and when it comes to rebuilding these
Yeah.
properties.
Yeah, that
Maybe
is
we should
true.
have an insurance company on and have them talk to us about that. Why that's a thing.
Yeah. Yeah, we could. Yeah, we could definitely do that because I have questions now.
Like that's how it was. I don't think it was like that. It may have been like that for this house too, but it's really weird like how they come up with these equations for it.
Yeah, yeah, it is weird. But now, like thinking about it, because I saw this episode, it's still around real estate, but I saw this episode of Hoarders, and the house was so bad. They were like, it will be cheaper for us to tear down this home and rebuild it than to just like go in there and fix everything up. And I thought that
Yeah.
was interesting.
Like I know and then two things that happened differently with these two home purchases. When I was in San Diego and I bought that house in San Diego, an adjuster came out to the house and took measurements and everything. Ain't nobody came out to this house and took
Yeah.
no measurements since I moved in. So I don't really know what's the difference between getting insurance in one state to the other, but that was really weird to me too. That hasn't been a thing either. So I guess it just depends on the state, maybe. But those are the things that we talked about. Our last segment is our last segment on this topic of what first-time home buyers should consider before purchasing their first home is closing costs. What do you want to talk about on closing costs?
Closing costs, you can do. Let's say if you're not trying to pay closing costs, you can either team up with a really good agent like Craig. He can help you with closing costs, or you could also do with closing costs. You can get your closing costs covered in exchange for a higher interest rate if that's what you want to do. What do you
Really?
think? Yeah.
How much higher? Like 2% higher?
So I'm a broker, so we have different coupons when it comes
Y'all
to.
negotiated, right?
Yeah, so it's just like, oh, this dude's, okay, this, half a point higher. This guy's giving me, $3,000 back. You know what I mean? Stuff like that.
Mm,
And then this other lender's probably, half a point, but only $500. It just all depends, man. Whatever the rates are doing that day.
got you. So, like to me, like closing costs, I would feel like it depends on the type of market that you're in. But like, let's say we was in the aggressive market that we was in earlier 2022, you had to come with 6% pretty much, really and truly covered, right?
Yeah, yeah. Like luckily for me, like when I bought my home, like it was the multifamily unit. Um, and some of my closing costs got covered because the seller ended up giving me, first month's rent and the
Got
security
you.
deposits. So they rolled that into the closing cost. So I only brought like $4,000 to the closing table, which isn't bad. But yeah, when it comes to that aggressive market, I feel like the only way that you can actually get your closing costs covered, let's say, just exchange your rate for a little bit higher interest rate, and you'll get a lender's credit to help you out with that.
Mm. Yeah, I mean, man, that's crazy. Yeah, so I'm in the process of just like thinking to myself, I got 3 more houses to close on by 2030. So I got to come up at least with another $30,000, hopefully, to just do those 3 houses on those deals that I want to do. So we'll see. Like, I think that's what you got to think about when it comes to that. You got to definitely calculate what your closing cost is going to be for each property that you're going to try to actually
Oh,
purchase. Or go ahead.
yeah. Yeah, and with that, closing costs, like just to get like the general rule of thumb, closing costs is usually like 3% of the sell price of the home.
Right.
Just for
Right.
just for the
Yeah.
viewers out there.
I like, and so then you take into consideration earnest money deposit. That may be another
Oh
3% too. So
yeah.
that's why you probably need to have 6% just to cover your bases, just in case of any loose ends that may come up. And if it doesn't wind up being around that percentage, you're going to get a check back. So it's like you. Go ahead.
When it comes to that earnest money deposit, like what? So I've heard two different. So like, what is the price point? Like each price point has a different like earnest money deposit, right? Is that true or no?
So I don't know if that's true, but I know some of the listings that I had to get back on that question. That's a good question, but I know some of the listings from what I've been looking at in MLS. Some tell you exactly how much earnest money deposit is actually needed to actually even have the offer considered.
Got it. Okay.
Yeah, some of them will say 1%, some 1% of the purchase price, or some will say $1,000. It'll tell you in certain cases how much the earnest money deposit needs to be to make the deal even be considered.
Got it. Okay, that makes
But
sense.
I don't think there's no fast and locked in rule to it. It needs to be a certain percent of it. But for a lot of, I know during last year, a lot of the agents were saying, "Hey, 3%. It shows that you're an aggressive buyer and that you're really interested in this property." So,
Damn, that's a
yeah,
lot.
yeah, right. And that's pretty much like pretty much your closing costs, right? Like
Yeah.
at that point in time, right? So it's crazy. Like I was like, damn, 3%, like 3% on like a certain case. Like, even if you put a 1%, like let's say it's 1%, right? 1% on a house that's $350,000. That's 3.5 grand.
Yeah, that's a lot of money, man. And
Yeah,
especially when you get to $500,000 price point, that's $15,000.
yeah.
That's crazy, man.
Yeah, I could. So that's what a lot of fast moving things was happening in this market, and people was doing whatever they could just to even lock in on the property. So that's I don't know. I think that you got to think about it from an instance that you do need to have about 6%, but usually you're going to typically need about 4% of that to close on the house completely.
What do you think? So yeah, so you were saying how people were doing everything to get a house back in that market. I read something that a lot of people have like buyer's remorse now when it comes to your purchase.
I'm not surprised by that. I wouldn't be surprised by that. And here's the reason why. Okay, man, boy, this is a good. This is a good topic. I wouldn't be surprised by it because to me, this is what I believe happened. Right. This is why I think people are getting better value right now at these higher interest rates, and people look at me like I'm crazy when I say that. Right. But during that time frame, interest rates being so low, think about this. People either one, they did two things. Either they refinanced a property that was not their primary, they refinanced their primary property, they refinanced their second property, they invested properties, whatever, right? But then, like say in 2020, you refinance those properties, you got your cash back.
Yeah.
2021 comes or 2022 comes, you're like, shoot, I ain't gonna make that money back ever again. Let me just offload this and make some more money on top of it.
Yeah.
So now they've gotten rid of all the junk properties that they didn't want in their portfolio anymore. And they offloaded those to somebody else who was waiving appraisal, waiving property inspections, like all the contingencies that would save you, right? Like, because you wanted this home so bad.
Yeah.
And now you got that home and you didn't have a home inspection, you didn't have an appraisal done, and all those things are now showing up to bite you in the behind. Because you didn't really know what your home was worth, and you didn't know what was really underneath the hood when you purchased it.
Yeah.
So to me, I can see buyer's remorse because right now all the value homes, the homes worth value, are in the market right now on sale, but it's at a higher interest rate. So you're like, but people are going through the right things, right? You are seeing expired listings more, we're seeing withdrawn listings more, and we're starting to see for sale by owners to start to shrink a lot. So we're seeing the market act the way that it should, but it's one of those things where they didn't realize what they was dealing with. So to me, I think you're getting a more quality home in this market than you was earlier on. Now that depends too, right? If you was buying in the higher price points, you probably got a good deal still, right? But really and truly, if you're buying in $350, $250 range during that time, you probably got a junk deal.
Yeah. Yeah. Now that you say that, yeah, I could definitely see that. Luckily, like I had a good agent. He told me not to, he didn't peer pressure me. Oh, you need to waive an appraisal. Well, I mean, I couldn't with VA loan, but he was like, he didn't tell me to, waive the home inspection. He was just like, I would suggest you get a home inspection. It's like, okay.
Yeah, I mean, this home was built in 2020, and so I was the second owner of it. So I waived the property inspection on it because it was brand new. It just came from underneath warranty. So I was like, it ain't. If it's something wrong with this, goddamn, I got robbed on a brand new home, pretty much. You know what I mean? The person didn't even stay here like a year and a half. So I was like, that doesn't make sense. And I bought a home warranty, so I like everything is under home warranty. So I just
Got it.
go with home warranty and be safe that way.
Yeah. 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 And then the thing too is like when you purchase a home, make sure figure out if you have a home warranty too, because sometimes they give you a home warranty and then you like when it expires, you get something in the mail. And then you never realize that you had a home warranty, which is
right.
That's what happened to me.
Oh man, yeah. Hey, I already used that joint. I had the electrician come out for that joint. I'd rather pay $125 than $450 an hour any day of the week. You know what I mean? So yeah, I mean it's good. Like you definitely know that about that. But I do agree with you that a lot of people probably do have buyer's remorse because that market is totally different than what it is now. Like junk portfolios was getting offloaded, and I think a lot of people took them, not knowing what they was getting.
I would say if I bought a single family home, I probably would have had buyer's remorse because like I'm just kind of like stuck here, Well, not stuck here, but I'm just like, okay, it's a single family home. This is my primary residence. I think because I acted super quick when I wanted to buy a duplex. Like I was like, okay, I want to do this, and then maybe a month later, I had a duplex already. Like it was kind of crazy how fast like I implemented the steps. But yeah, I think doing what I did, like house hacking, that's the only reason I don't have buyer's remorse.
I mean, that's a whole episode in itself talking about house hacking, because I know a lot of service members. I know a lot of people who want to get into homes early on. They really want to talk about house hacking, or they think house hacking is for them. And maybe we should just have a conversation about the house hacking next time, so that way we can give them insight into how Oscar see house hacking could be beneficial to you.
Yeah, it's a good thing, but it's also a bad thing. We'll leave it at that.
Oh man, so yeah, that's it. So I mean, that's our tips for today, right? When it comes to being a first time home buyer, and what you should consider before you buy: affordability, right? Location, home conditions, future plans, homeowners insurance, and then closing costs. All those should be considered as you making your plans to actually buy your first home as a first time home buyer. Anything else to add to that, Oscar?
No, I think that's it. I'm just excited for next week's episode on house hacking.
Oh yeah, we're gonna get into house hacking next week. So once again, this is a real estate scoop. If you have not yet joined us or have subscribed to the channel, or even definitely just follow the podcast, you need to go ahead and do that, because we're going to continue to bring you high actionable items like we do each and every week. And comment below and let us know what other things that we should provide you commentary on as well, that you find value in, or that you want to have questions about, that you need to get answers to. And like I always say, hey, hit that like button, and definitely next video. Y'all stay safe.
All right, thank you, Kirk, for